Hi, I'm Keon, a research analyst with Lipper, and I'm here to speak to you about fund flow activity for the week ended Wednesday, March 9th. Let's start by taking a quick look at last week's market activity. The S&P 500 index managed to squeak out a small gain of 0.1%. This marked their fourth straight week of increases for a total of just over 7% during that time frame. This little mini rally is starting to make up for the doldrums we saw at the start of the year, in which the index retreated just over 11% during the first 6 weeks of the year. The market took strength last week from a rally in oil prices. U.S. crude was up in 7 out of its last 8 trading sessions, including hitting a 3-month high of $38.51. The market also took strength from some positive economic data, as there was an increase and we saw a strong jobs report that had an increase of 242,000 in non-farm payrolls. Let's turn our attention back now to the fund flow activity. Let's start by taking a look at our macro groups. Last week, we saw that equity mutual funds had positive net flows of $400 million. Taxable bond funds took in $3.4 billion in net new money. Muni bond funds saw an increase of $450 million, and money market funds took in approximately $2.4 billion. Let's take a closer look at our equity mutual fund group now. The $400 million in net inflows marked the second week in 3 that they've experienced positive flows. And breaking out the data by both the week and the year to date, we see a continuation of last year's trend where non-domestic equity funds are accounting for the majority, or if not all, of the positive flows. In last week's activity, we saw non-domestic equity take in $416 million, while domestic equity funds saw $16 million leave. And overall, for the year to date, non-domestic equities has had positive flows of greater than $20 billion, while domestic equity funds have seen $14 billion leave their coffers. Moving on now, let's take a closer look at the equity ETF side of the ledger. The group had $4.2 billion in net inflows last week, their second consecutive week of inflows after 4 straight weeks of outflows. The big players last week were the iShares MSCI Emerging Markets ETF, which took in $900 million in net new money, and the iShares Russell 2000 ETF had positive flows of $500 million. Among the outflows, we see the iShares MSCI Japan ETF with the largest outflow at roughly $500 million. Let's take a closer look now at our taxable bond groups, starting with mutual funds. The group had $3.4 billion in net inflows last week. It marked their 3rd straight week of net inflows, during which time they've taken in $13.3 billion in net new money. The big player last week was high yield funds, which had net inflows of $1.6 billion for the week. This marked their 3rd straight week of net inflows for roughly an increase of $7 billion. This comes directly on the heels of 15 straight weeks of outflows, which they saw $12 billion leave their coffers. Let's move over to the ETF side of the equation now. For taxable bond ETFs, they took in $2.4 billion in net new money last week, their 9th consecutive week of positive flows. During this time frame, they've had just over $20 billion in net new money come in. The big increases last week belong to the iShares Core U.S. Ag Bond product, which saw $700 million come into their coffers, followed by the iShares JP Morgan USD Emerging Market Bond ETF, which had about $500 million in positive flows. The iShares 1 to 3 year Treasury Bond ETF had about $500 million in outflows, leading the way there. Let's move on to our next group now, the municipal bond group. Muni bond funds took about $450 million in net new money last week. It's their 23rd consecutive week of positive flows. The last 4 weeks, they experienced positive flows despite having negative performance in each week. The big players last week, which is that they've been kind of key players throughout, has been the Intermediate Muni Debt Fund Group, which took in about $166 million in net new money, and General Munis had positive flows of $117 million. Moving on to our last group now, money market funds. The group had $2.4 billion in net inflows last week, their 4th straight week of inflows, during which time they've taken in over $13 billion in net new money. The big players last week were institutional U.S. money market funds with $7.5 billion in net flows, followed by institutional U.S. government money market funds, which had about $2.8 billion in net new money come in. And on the sell side, we see institutional U.S. Treasury money market funds with net outflows of roughly $4.7 billion. Well, that wraps up this week's report. Please join us here again next week where another one of our analysts will speak to you about that week's fund flows activity. In the meantime, if you'd like to take a deeper dive with the data, please join us at our website, www.lipperusfundflows.com.